Hey guys, welcome back to another video, and today I'm here to talk about a very cheap stock. It is under $3 and they have an earnings report coming out tomorrow. So I think that you should pick up some shares of this stock. It would be a very good investment, just if you're willing to, kind of pill a lottery ticket here. I think that some big things could happen from buying the stock right now. So if you guys do enjoy this video, be sure to smash the like button, also subscribe to the channel. I very much appreciate the support. We're almost at 330 subscribers, big milestones. Thank you guys for the support, and let's get right into it. So the stock we're talking about today is Microvast Holdings. So we can see Microvast is a almost $3 stock. They went up a lot. They went up 9% over on, when was this? This was Friday. And if we take a look right here, we can see, so Microvast Holdings Incorporated is an advanced battery technology company. It engages in the business of designing, developing, and manufacturing battery components and systems primarily for electric commercial vehicles and utility scale energy storage systems. So this company has been around since 2006. The worst thing about this company, the reason why it is a penny stock, we can see all the time. I mean, they haven't been public for very long, but we see they've been very cheap, but much cheaper than this at times. They've been 19 cents. So them hitting $3 is a very good thing, very promising. But we see that their earnings are coming out tomorrow after hours. So you're going to have time to invest in it during the day tomorrow. And we see their earnings per share is actually negative and their market cap is under $1 billion. So that is why this stock is a penny stock, but it looks like they're going to flip to profitability. And if they do that, then I think the stock price is going to soar post earnings, and that's why I think there probably is an options play. Getting into an options play in this company, maybe I like the 40-day one, September 19th. There's some $3 calls for that. I don't hate that. And let's do some math right now. So we have Microvast Holdings, so MVST. We go on Market Chameleon. Let's check. We see that it overestimated it 50% of the time. So you have a 50% chance to make money on this, I'd say. Maybe even a little bit better. But, I mean, if you buy a call and a put, you'd have a better chance. But let's say we just buy a call, because, I mean, that's probably what I'm going to do. So the predicted move after earnings was 18.9%, but the average was 43.8%. So this is very good. And then we see that the average implied volatility crush is only 11%. So if we take this right here, and if it moves, 45% after earnings, we have that volatility crush of, minus 11%. Let's get it to right there. We'd actually make, triple our money. So you invest $45 and you're getting 89 back. So yeah, you're making more than, just about triple your money. And that's if it only goes up 45%. I think it's very possible this company goes up 100% and you 10x your money. It's a very cheap contract. I think that there's a lot of potential with this one. I really do like the odds with this one, because if it drops and you lose $45, then, I mean, it's not the end of the world for me. I think if you're investing in the stock market and you have a decent sized portfolio, $45 wouldn't be the end of the world. But, a $200, $300 from $45, a gain of that size would make for, a pretty good day. So if we go a little bit deeper on this company, I don't hate shares either. I think buying shares of this company makes a lot of sense, especially before the earnings, and then after earnings you can dollar cost average down if need be. But I really do like the way that this company works. I've did a little bit of looking into their company and their balance sheet, and I very much do believe in them. And I think that overall their idea is very good, and the concept of their business and the way that they're, participating in this practice of providing electric batteries for electric vehicles, which are gaining very heavily in popularity. Um, as time goes on, there's a bill that passed in California, if I'm not mistaken, that says that that you can only produce electric vehicles, like after the year 2030 something. So this could be a very good long-term play. I don't hate it. I think that this is, one of those stocks that makes the batteries for those electric cars. There's not very many. And this is one that's very young, and you see they have good demand. They're getting contracts from these big companies, and I think it's only a matter of time before they get that stable income, and they have these, stable contracts flowing over and over again, and they're reoccurring, and then they just keep, reaping the benefits of this income from these contracts with these big electric car manufacturers. And it doesn't even need to be electric cars. There's a lot of, renewable energy. So they make the batteries for that. And there's a lot of places that need that. A lot of establishments, a lot of, businesses need that. And if they get these commercial contracts, I think that this company is going to, go to the moon. So we see that this is a little article right here. It talks a little bit about it. So Microvast Holdings gross margins saw an improvement because of operational efficiencies and better capacity utilization. Its innovative solid-state battery 3D printing technology, which enables adaptable cell fabrication, can open new market opportunities. Microvast Holdings' favorable revenue outlook for 2025, aided by a significant backlog, strengthens confidence in future growth potential. So I very much agree with this as well. Their last earnings, the stock actually went up 100%, about even more than that. So you can see in the past year, it's up 719%. And I mean, this is, it's a pretty good chance that it's going to keep going up. Usually if a stock is on this much of a tear, then it doesn't stop just like that randomly. So I think that there is, another 100% move left in the stock. If you did get in at 19 cents or 20 cents, I mean, even 18 cents, then good on you. You did a very good thing. But that would have been very hard to do, to know that this company is going to do what it's doing now. But we see, I mean, this earnings was very good for the company. They were an 18-cent company. Now they hit 80 cents, and then now they're not even in fear of getting delisted from the NASDAQ, which they were. So I think that their revenue and their, income is the scariest part of this company, because they aren't, free flowing. They don't have that backing of cash flow where, oh, okay, we're going to be fine if there's a hard turn in the economy. But I do think with the economy lightening up and interest rates most likely being cut, the federal funds rate are probably going to be cut next meeting, if I had to take a guess. So I really do like the odds for this company and what they can do in their earnings report. And that's why I think some options would not be a bad idea, just to get the exposure for this company. I don't hate, you could get some of these, which are $45. These are 67. You get some for 30. It just does have to move more in that case, which I think it will. So you could also do a strangle if you think the stock's going to go down. If it goes down a certain percentage in each direction, then you'll make some money. So I'm not going to do a strangle, but if you wanted to, then you could. I think that's good with some stocks, but I think with this one, it's either going to drop a little or it's really going to run. So that's why I like the call option a little bit more for this one. I think that it's very compelling to get a call option in this stock. And then I also just like buying shares of this stock. I think buying shares of this company is a very good idea just for the long term, because this is, a sector where it's going to grow. There's going to be a lot of spending on this, a lot of CapEx for these electric car companies in particular, but also other companies out there. And this is, a small player in the game, but it is also a very good one. I mean, just look at their fundamentals and what this company has been doing, over the past really almost 20 years. And I really like what this company has in store. We read this article right here. So it also says in here, Microvast Holdings booked a net profit of $61 million and a positive adjusted EBITDA of $28.5 million, reflecting an increased demand for its advanced battery solutions, as well as the effectiveness of its emphasis on profitability and operational efficiency. So this is a very, just reassuring thing to see. It expects high growth EMEA business will maintain strong momentum and will continue to fuel year over year revenue increases. The company has been actively pursuing new strategic partnerships in the region in order to help its current and upcoming product lines. So this company has it figured out, it looks like. So I think that this company being so cheap, it is a steal. You need to get into this company very fast. I think that if you don't, then it can take off very quick. This can be a $10 company overnight, honestly. I think that that's not insane to say, and even after their earnings, they could jump to, around $10, which you'd be 20xing your option. Not a bad idea to get into some options of this company, because I think it hitting $10, it's unlikely, but it's not impossible. I think that this company after their earnings is going to look a lot different. I think they're even going to run up before their earnings a good amount. You might even be able to just make some money off the options before they even have their earnings. Let's say you buy it Monday morning, maybe the implied volatility rises a little bit and the stock goes up, 10-14% like this, and then you're up $20. I mean, it's pretty easy, and you only put 30 in, so you're pretty much doubling your money for just being in a stock before earnings, not even during earnings. So very good stock to invest in my opinion. I wouldn't put all your money in it. Like I always say, these penny stocks you can't trust. They could go bankrupt. Don't marry a stock. Don't have emotions when investing in the stock market. You won't be successful. but you do need to, I would put some of this in my portfolio just to have like a little bit of exposure to it. Like how in my portfolio, I don't have many retail stocks, just stocks that are on the shelves at Target. I have a few. Actually, I have a decent amount, but not many. But then that's why we have Honest, because they're in that section of industrials and household goods. And then I also have Fubo, which is a penny stock. But both of these stocks I don't have much money in. Like this is 0.5% of my portfolio. And then if we go to Honest, that's a little bit more, if I'm not mistaken. But I mean, it's not much more. It's under 2% for sure. So yeah, it's 0.97%. So they're not even a percent of my portfolio. Let's change that soon. But I'm also gonna, dollar cost average down on Honest. This is looking like a very good stock, but I'll make another video on that. But yeah, I mean, I do believe in Microvast Technology before their earnings. I think that it is a good time to get in, and only good things can come out of that. Just be ready. Like, if you do buy this option, which I think it's a good option to buy, this $3 call. I think it's really compelling. But know that you're taking the risk of losing all your money if the stock drops, and then you're taking the risk of 10xing your money if the stock rises. So I think either way, I'd be fine with it. I think that both these outcomes are very plausible. I think that this is probably gonna, it's gonna end out one of the other ways of a big percentage gain or drop. So yeah, that's all I have for the video today, guys. I hope that you get into some of these shares, or at least check the company out and see if it's for you. If you did enjoy this video, be sure to smash the like button. Also subscribe to the channel. I really appreciate you watching. Catch you in the next one. Peace.